Good afternoon. It's Tuesday, the 24th of November, 2009, and the market closed with a slight gain here for the S&P 500, up 17 cents. It did kind of have a little bit of a scare there for some bulls. First thing in the morning, we'd seen the market gap up slightly and then sell off very quickly. It got back up to the two-day volume weighted average price, and then kind of back and forth along the daily VWAP for support. Finally, the buyers did take control, and realistically, you look at this, you still have to continue to be impressed with the ability for the market to hold up. We did get below that 110.50 level, but only were down there for about 20 minutes or so. And you can see where the market found support was right at that prior high at 110. So, when this support level gave way, we came down basically to where the market was supposed to, and then saw the bounce develop from there. So 110.50 continues to be an important level, and as I was saying yesterday, this market just seems more range bound than anything. And right now we're pretty much we're getting near the high end of the range. Actually, I was going to say we're in the middle of the range, but we're at the higher end of the range, and with the primary trend still being higher, we have to give the benefit of the doubt to the buyers. But with it, the market again, as extended it is to the upside, with us approaching this two-thirds retracement level, and also looking at the the trend line, uh, that it means that is extended as we are to the upside, but in a primary trend, it just means we have to be aware of the possibility that perhaps we're not going to see a pullback from these levels through price, but maybe a time correction would be more appropriate up here. I think that more people are looking for the market to kind of cave in, but the market can digest those gains obviously just as easily by consolidating through time. The bigger damage will be done below this level here at about 108.80. Getting back below that level, then there's bigger damage. But so now we have to look at 110 and a half, and also 110 as our short-term levels of potential support if we're to see any further pullback. It's good to see that the market did hold back above that 5-day moving average for today, and that 5-day moving average is starting to flatten out. So we get up through this level, we could see another round of short squeezes that brings this market up towards that 112.30 level. The Nasdaq was down 15 cents, but it's holding above that 5-day moving average right now. So starting tomorrow, this thing will flatten out and actually begin to turn slightly higher. If we just stay at current prices, actually it'll start to turn higher. We'll be getting rid of data from this day. So tomorrow, at the end of the day tomorrow, this will be day 1, 2, 3, and 4, and then tomorrow will be day 5. So we should actually begin to start to turn higher, or flatten out, just with the market going sideways. So we've got a slight downtrend line you could look at in there. We've also got this little resistance at 44.40. Getting up through that then puts us in contention with the highs for the year in this move. Support right now. Let's just look at the 10-minute time frame. You can see kind of the same thing here, that the high, that prior high from late last week intraday did become an intraday level of support. So we've got the market above the 5-day moving average. The 5-day moving average is declining. Tomorrow that 5-day moving average should start to flatten out and turn higher. So we're in a primary uptrend. Each one of these little sell-offs so far has not turned out to be the end, obviously, and it'll take a move down through about 43.30 for bigger reasons to be concerned. Tomorrow is the day before Thanksgiving. A lot of times we're going to see super light volume. Today we're already starting to see that the volume was not quite half, but about maybe two-thirds of the average daily trading volume here over the last 20 days. So tomorrow is going to be a difficult day to trade. If you get involved in some of the stocks that are moving, they can have exaggerated gains, but it's more, finding the movers isn't as easy kind of the day before. It's more, you got to kind of go where the momentum is, keep tight stops, and see if you can catch some momentum that does develop and hold, turn into something more than just a quick 5 or 10 cent move that fails. Today, the big mover in there today was this AONE, and realistically, you look at it. I mean, it was up from 14.70 and 15 bucks a share or so to 17, and you look at it and say, wow, wouldn't that be great? But on AONE, you look at the daily time frame. There was nothing to suggest that was going to occur today. The market, the stock found some news, I guess, and it got the upside got exaggerated because there's short sellers in here who were trapped, and because of the pre-holiday lighter volume, there's a lot of people just started chasing the stock. Russell 2000 was down 27 cents. Again, on the daily time frame, more neutral than anything. What would change that is a break basically below 58. I mean, we could say below this level, but I think 58 is the more important level psychologically, that if the market breaks down below that level, then we could see further downside. But we've got a real mixed message from these moving averages, just kind of crossing back and forth in here. That we've got the 10 up through the 20 down through the 50 flattening out. So right now on the 30-minute time frame, I think it makes most sense to look at basically 58 to 60. $60.70. We've got that 5-day moving average declining in here, market above it for the second day in a row, so still mixed messages in there. Tomorrow we get rid of this day, so the 5-day moving average should flatten out and actually begin to turn higher, just as a function of the market going sideways, because we're getting rid of this older data, and then on Friday we'll be getting rid of this older data as well. So real mixed bag for the Russell. Semiconductors were up 17 cents. They're back above the 5-day moving average. The 5-day moving average is advancing, and this market on the daily time frame, again, we'd seen that the main the main area that this market's been range was the word I was looking for, has basically been 26 and a half down towards 24. We're at 25 and a half. So really just kind of uninteresting trading in the semiconductors. The financials, same thing. They were down 11 cents today. You look at this daily time frame, there's just nothing going on in here in these financials. I see all kinds of people on Twitter trying to get involved in FAS and FAZ, and those triple leverage funds are just going to chop you up basically 3 times quicker, as we're pretty much neutral in here. Again, like I said yesterday, the bigger level for this market that we're going to have to be aware of is 14 and a half. Breaking below 14 and a half, then I think you see a little bit of confidence erosion overall in this market, and perhaps we go back down and test that 14 level. So if you're one of those people who looks at FAZ, which is the triple short, then that would pretty much be the equivalent of getting above 20 and a quarter or so, and then maybe the FAZ moves up towards 21.75, 22. But realistically, you got to look at these financials and say there's just not much going on in there, and that's what we had with these stocks. We were in this IMGN today. IMGN. As I said, it was questionable whether anyone bought it there. You shouldn't have, just based on staying out of the market for the first couple minutes. It gapped up, ran a few pennies, and then just fell apart. Playboy, maybe I had reset the stop a little bit too tight, but actually, you look at it, we would have been stopped out at the 390 as well. Someone asked me midday, it was probably at about this point, hey, do you think that Playboy is a good buy here? And I said, my concern is it's back below the daily VWAP. This person said they had missed it. I said, it's below the daily VWAP, and I would rather see it get back above this level before considering a new purchase if you hadn't been involved in the morning. That was basically this level right here. So instead it did dip back down further. I still think you want to keep an eye on this generally over the next couple days, but just no momentum in there, and no momentum in the YGE. Obviously, well, actually there was downward momentum, but it gapped lower and then continued lower throughout the day. So what I think I'm going to do for tomorrow. Tomorrow again is going to be a very short day. Not short, but very low volume day, and I think I'm just going to put together watch list ideas for you guys. I'll do another video and answer some of the questions at 1B Shannon, but just expect a more watch list with general areas rather than specific numbers. I don't think you can take things too literally tomorrow with the volume as light as it might be. If you're taking tomorrow off and not trading, I want to wish everyone a great Thanksgiving, and probably shouldn't trade on Friday either, as it's going to be a half a day. But I'll probably put some ideas up there. That's all for now. Thanks.